Hello and welcome to episode 2 of Cross-Chain Examination. I'm your host, Katherine Wu. So today we have on a really special guest, Egan. Ash is one of the few OG crypto investors who got into crypto super early, and he's been leading investments in crypto since 2015. And he's been super instrumental in teaching me actually a lot of really valuable lessons when it comes to crypto, and specifically when it comes to investing in crypto companies. Currently, he's a founder of Archetype, an early stage venture capital firm investing in crypto founders at their earliest stages. I also work with Ash at Archetype as a venture partner, and I thought it would be really fun to bring him on to chat about all things crypto today. So, in today's discussion, we're going to talk about how we think about the industry, what we're excited about in crypto, and touch on a little bit of our day-to-day at Archetype. Welcome to episode 2 of Cross-Chain Examination. Today we have on our very own Ash Egan, the founder and GP of Archetype. Ash, welcome to the show.
Thank you for having me. Great to be here.
We are very honored to have you. So today's topic, I was thinking just to have like a general discussion about crypto, talk about the trends, talk about lessons from the past, just because you've been in this space for so long. So, just for our listeners, and correct me if I'm wrong, but Ash has been investing in crypto since 2015, right? So that makes it 7 years. So I think it would be nice to start if we just went down like a nice walk down memory lane. And so I kind of wanted to touch on, maybe rewinding back, what are some of the big moments in the past few years that you consider industry defining moments, or just big events in general? It could be good, like aha. It could also just be not so great.
A lot has happened over the last 7 years. For me, the moment I jumped into the space was reading the Ethereum white paper in 2015 and reading about smart contracts and sort of the potential use cases. It's honestly incredible how far we've come from, the white paper that Vitalik wrote, years and years ago. And now you have just, such a proliferation of applications, infrastructure, developers, new talent entering the space. I think, though, if we really drill down to, what are some of the watershed moments within crypto over the last few years, I think it's the standardization we've seen, especially around ERC20, around 721. That ERC20 originally materialized as ICOs. It wasn't, and it took 2 or so years, 3 years after that for DeFi to really reach, come to fruition. And so it was similar with 721s, 2017, 2018, but it really wasn't until 2020 or so that we saw OpenSea, gain massive adoption and all these things. And so I think what's been incredible is just the experimentation, and we're still experimenting for, crypto founders, use cases and all these things, but it's not just the Bitcoin market anymore. Crypto and Web3, right? It's the belief here is that crypto Web3 permeates every industry. Smart contracts underpin all commerce. And then you're also going to have the creation of entirely new markets. It's not just the Uber's built on a blockchain or, Facebook 2.0 is built on a blockchain. I think we're going to see not only, some of these traditional and incumbents build on decentralized infrastructure, but also the creation of entirely new markets. And, I think just...
So to wind, let's pause. So the first thing I think, and I know you, right? And so I know for you, the Ethereum white paper was like a big aha moment for you. And so let's define it as the Ethereum white paper. And then the ERC 721s, for our listeners who might not know, is essentially the token standard that NFTs are based on.
That's
correct.
And
I know, and I like that you said that because I hear you say it all the time, smart contracts underpin the future of digital commerce. Okay, so maybe before you go on too far, and I want to hear you, but I just want to pause, let's dig into that phrase just because you say it so much. What's your thesis? What was the aha thing? What was the thing that clicked that made you really, believe in it so long ago when, there were not that many things going on in crypto at the time?
Yeah, I think it was as particular as Vitalik talking about crowdfunding and the different types of applications that could get built on Ethereum. At the time, I thought Indiegogo, Kickstarter were fascinating, just as consumer products. And with a 24/7 open type of infrastructure, not only could you build Kickstarter and Indiegogo on decentralized infrastructure and sort of leveraging smart contracts and liquidity and 24/7 permissionless open nature of them, but you could also build tons of other things. And I think with smart contracts, the most exciting part is these are just really APIs, but they're open to anyone. Anyone with an internet connection can tap into this liquidity, tap into these assets, the IP. And so, you don't have to rely on the gatekeepers, and, you hit a certain API limit, you could get shut off, or you build a killer application, you could get shut off. So I think just the permissionless innovation possibility that smart contracts enable is what got me so excited about years and years ago.
What were the first couple of investments that you made in the crypto industry, and why?
My first investment as a venture capitalist in the ecosystem was the seed round of Chainalysis in 2015. And my thesis was as simple as, if crypto and Bitcoin and it wasn't called Web3 at the time, but if this new technology is going to be come to fruition and get to scale, you need to have some kind of access portal or some kind of route for the incumbents, regulators, governments, TradFi, to basically understand what's happening on these blockchains. And it is all open, right? All of these transactions anyone can view them, right? But, just Chainalysis having the purview to package up that data and selling it to, the appropriate constituents to, cross the chasm and not be seen as, this shadowy supercoder kind of market. So I think, that was sort of the first of many. My second investment was in BlockFi, their seed round, while I was at Consensus. And so I think that was just seeing, at Consensus, you had a massive amount of wealth creation that happened over quite a short time period. I joined Consensus as maybe employee 200 or so. ETH at the time was $80. Over the course of 6 months, ETH surpassed $1,000, and the company grew to over 1,000 employees. And so just seeing the wealth creation around me, and not having ways to get access to cash beyond selling your Ether or selling your other crypto holdings, it just seemed like a massive pain point. So just seeing that out of colleagues around me, it's like something like BlockFi needs to exist. We can fast forward to some of the protocols that I invested during my time at Accomplice, like Near, focusing on a more scalable blockchain, things like Balancer, basically democratizing liquidity provision and, almost building a decentralized version of NASDAQ. So it's been quite a journey, and, the stuff we're doing today is wildly different than when I just started dipping my toes in 2015.
I mean, first of all, I agree. I think the industry's grown so big. You used to just be a crypto investor and that was all there is. And now there's so many subcategories like DAOs. And, the last episode, I had the Crypto Covenant team on. We talked about NFTs. We talked about building a community around NFTs. And so I think crypto has gotten so much bigger now, and the app layer has just grown too. Like, there's just so many things that can get built on whatever protocol or, whatever ecosystem you want to build on, it's possible. What about we talk all the time, and especially looking back, it's like rose tinted glasses, like everything is great, everything's innovative. But were there any pinpoints in time in the last 7 years where maybe something happened where it kind of made you, take a step back, like, whoa, we're still so far away from, going mainstream, or, any other instances?
Yeah, I think there's been a significant amount of bad behavior. And this comes along with any new technology, right? So in the ICO era, you had a number of teams that were going out and they had no plan to build something for the long term. It was sort of just entirely a cash grab. I think we've seen that in the NFT ecosystem, these drops, et cetera, the rugs. We saw it in DeFi. And so whenever you have a change in behavior or usage, or a change in technology, the hope is you have all credible players. But I think the reality is you're going to have some bad behavior and folks who want to take advantage of new behavior and the less educated users. And so that I do believe is the sort of tiny minority of investors, builders, just community participants. But I would be lying if I said, that didn't exist in some capacity over the last few years.
Yeah, it's actually extra unfortunate. I feel like, there's such a small selective minority of bad behavior that unfortunately gets sensationalized in the media. And so, when I talk to like my friends around me, I think people are a little bit wary. They're a little bit scared. Obviously, in the last 2 years, with the explosion of NFTs, I think it's definitely piqued people's interest. I think NFTs are a lot easier to understand than if I'm explaining, some layer one or some protocol. I think that's just like people's eyes glaze over. So certainly it's brought mainstream attention, but I think, it's also brought a lot of retail investors and just your normal everyday, internet users who I think still lack the right tools and information to really just, full on do your own research. So I definitely think that's like a, gap that we should all address and solve.
Yeah, totally. And I do think users have gotten smarter about, they've gotten comfortable around, having a non-custodial wallet, the seed recovery, like you never expose that. So you have these hard learnings, and you're going to have, we've seen some amount of bad actors there, but the hope is through these mishaps, you have a more educated user base, and we are certainly seeing that. Just look at MetaMask downloads, right? Look at on-chain activity. Look at DEXs versus SEXs. It's honestly remarkable, just the education and sort of acceleration in usage from a decentralized, underpinned by smart contract lens. So look, it's going to be ongoing, but the hope is users will continue to get more educated, and the less credible money grab kind of folks are it's just much more difficult to rug the average user or so.
I was thinking back to, I got my first email address when I was 12. And back then, the very there was a really popular technique in really just like scamming online, which is like the whole email about either emailing you about you winning the lottery, or it's like a very famous, I'm the Prince of Nigeria and like you actually, send you this money. And I think these days, people don't really fall for it anymore because it's become, just like so known among just like, it's like a joke at this point, right? Or these like chain mails I used to send around. So my hope is, as crypto grows up and as good behavior proliferates, people learn, what are kind of really clear scams and what are really clear red flags to watch out for. And so that's my personal hope for it.
Yeah. Well, and I do think Web3 and crypto have crossed the chasm into the mainstream over the last 12 to 18 months. And so, the incumbents are now look at crypto as a large enough market, enough users where it's sort of like, okay, we have to figure out what our strategy is here. I remember years ago with some of these, with some of the telephone providers, the Verizons, or the hacks were porting phone numbers. And it seems like the providers have gotten smarter, or just simply have acknowledged that this could happen in crypto. And so, knock on wood, but rarely hear about those kinds of hacks or instances.
This might be a good time to just, on the topic of doing your own research, being vigilant, having, given your track record, you've been an investor at both kind of like a, what I would call a Web2 generalist venture capital fund. And now, you're obviously running your own crypto focused fund. What would you say, are some of the key differences between investing into the crypto industry versus, traditional VC?
Well, I think the crypto founders, the ask is so much more specific and so niche compared to your generalist VC, right? Of course, you need to still help out on recruiting, strategy, being a sounding board, being support, obviously being a financing partner to these to these teams and these founders. But it also goes way beyond that, building out a community, figuring out, are you going to launch a token? How are you going to do that? Even the talent, right? It looks so different from your typical Silicon Valley talent, right? So you could be a 17-year-old kid and you could be one of the best smart contract developers, Solidity devs. So I think sort of like the lens has evolved a ton, and the ask of the crypto founder, both for supporting infrastructure, pure equity companies, and the teams that are trying to launch protocols, it just become nuanced to the point where if you're not sort of consuming Web3 crypto 24/7, it's just really difficult, I think, to deliver on those asks. And so, we're constantly evolving and thinking through how can we better service the founders that we back? How can we get them to where they want to be faster? How can we, sort of help them guide them to particular markets or a different strategy or whatever it may be, or even co-building with them. And so, I think it's partially a maturing of crypto as an asset class. But, I think the best analogy is just how biotech venture investing just ended up splitting off back in the 90s from your, tech investing.
How do you actually, at such an early stage, so, where Archetype invests in is sometimes just an idea, right? It's really just before anything, really an inception capital, as you call it. How do you personally like gain conviction in just like an idea, because that seems so crazy. Like there's no cash flow, there's nothing. Like how do you, as an investor, you hear these pitches, you think about the idea, like how do you gain like so much conviction to be like, here is some capital, go build your company?
So I think what we love is, and you know this well, fellow colleague, I think what we really love is founders who have a unique vision of the future, and they're not building just because someone else is. It's not reactive, but they've organically come across a problem set or a opportunity, and they have their own vision of the future. I do think in every industry, you're just going to have some aspect of teams, trying to outcompete other teams, and you have an existing market, and it's really an execution bet. I think what we get excited about are the founders who can create entirely new markets, who can create new user behavior. And so, I think these are really tricky to get right, but, I think that's what we get really excited about is founders who have the ability to create entirely new markets or just change the status quo. And so, they're not going to have everything figured out at the early stages. There's sometimes that we'll invest in just people, and it's pre-idea, and we'll go through, the list of, let's say, 3 to 30 different ideas or concepts or market opportunities that we see. But ultimately it's about, the founders self-actualizing and getting excited about a particular opportunity. And so, it's going to be different depending on what they're doing, but I think it's just, seeing that unique vision and then doing everything we possibly can to get them from 0 to 1.
Yeah. I mean, both starting a company and also, investing in a company, both requires a little bit of, actually a large leap of faith, right? On the investor side is that you share the vision, you believe in the team. I mean, and can see a whole, 10-year plan based off just an idea. And for the founders themselves, obviously that's just like the biggest change you can take to your career. But, yeah, I think another thing that I think is really important is just being a power user of all the products, right? And I think this too. Sometimes if you're a power user, you understand the pain points deeply, right? Whether you're a potential user or you learn these lessons just through navigating the bot chain. So like, for example, you and I, or actually you mostly, you're a big power user of Etherscan, right? Like anything that happens, you want to, just check it out, but it's still impossible. It's, Etherscan is amazing. Honestly, like I think the team has done, such a great job with just such a small team over the years. But Etherscan was also built for a different time, right? It was built for the, pre-mainstream, crypto world. And so I think some of the tooling on there can be a little bit difficult to understand for your, average users, and even for people who've been in the space for a while. And so, you wouldn't know that unless you are using it all the time. And so I think as an investor, it certainly helps to be a power user. And I think that's a little bit under discussed, like how much you actually need to like use everything and, sometimes make mistakes to really learn.
Yeah, I totally agree. And we live this on a day-to-day basis, right? Being power users across everything, right? Being part of DAOs, playing in DeFi, sort of playing around with the new 721 instances, playing around with NFTs, being a collector, talking to these different creators, jumping on Zoom calls. Hey, what are you playing around with? And so I think if you look across the portfolio, the vast majority of our investments are things that we are users of. And it predates Archetype as well. I think, at Accomplice, we were investor, sort of led the investment in Near and Flow and Mina. And those investments actually led to the investment in Bison Trails. And Accomplice was the first customer of Bison Trails. We didn't want to set up this staking infrastructure ourselves in-house. And I was actually in the process of setting that up at the time I met the Bison Trails team. And so I think it's super, super similar. And we take a very similar kind of framework at Archetype. It's like, we want to be power users of the things that we're investing in. It's not always going to be the case, but I do think that gives us, an insane amount of insight into what's next, sort of what the integration and collaboration partners might be. And it also helps us closer, work more closely with these founders.
Yeah, and it probably makes you feel more like a peer too, right? Like, both complain about the same pain points, and I think people like that. Sometimes I get a pitch and they're solving like a headache that I've had for years, and I just I get so excited. And I think that shows. So definitely, and I think it's just good learning in general. Like, if people want to learn more about crypto, just start using the products, right? Especially if they're kind of lower barrier to entry types, things that don't cost you thousands of dollars to just use. I certainly think that, download MetaMask is an easy extension on your browser, right? Definitely that is part of the journey. And, whether it's NFTs or it's DeFi, a lot of it is you just have to use it to learn it a little bit. So maybe switching topics a little bit. Moving towards the upcoming stuff, so upcoming trends and narratives. So currently, right now, what piques your interest in crypto? And then I'm going to follow up with what frustrates you. But let's start with what piques your interest first.
Yeah, so I think we are dawn of the application era for crypto. And I think that's a big reason why Web3 as a name resonated over the past 12, 18 months. Who sort of kicked that off? You could point to OpenSea and sort of the NFT activities. You could point to DeFi. It's hard to say exactly when the application era started, but my belief is that over the next 5 years, we will have interfaces and applications that can get to tens, if not hundreds of millions of active users. And so I think the big open question is, will the complexities or the existing user experience of sending a transaction or interacting with Ethereum, these applications, will that be abstracted, or will we see an increase in comfort around how to interact with these applications and paying gas fees, ensuring that your seed recovery is tucked away and not exposed to the internet? I think there's a bunch of things, but and so then the next framing is, okay, what are those applications going to be? And so I think we're excited about, as marketplaces in Web 2. It's, you bootstrap the demand side by Facebook ad dollars, you get to scale, and then you ratchet up rake, and the company and a small group of investors accrue all of the value there. You leave the demand side and the supply side sort of at the wayside for purely profit-based reasons for the cap table. And so in a token denominated world, you can pull the levers and actually reward your most valuable users and your future most valuable users. It's just more equitable. So I think marketplaces are just a segment that we're really excited about. I think music NFTs, just having different vehicles of distributing value, allowing creators to access their collectors, their fans, just sort of these new mediums. We're really excited about Web3 social, right? Is that a year away? Is that 3 years away? Is it 5 years away? We'll see. I think that's a category that we're also very excited about. And there's going to be a bunch of others that could be right around the corner that haven't popped up yet. So we continue to be very excited about experimentation and just pushing the limits on what you can build with sort of smart contracts under the hood today.
Mm-hmm. Yeah. I mean, I get questions all the time from people who are not as deep in crypto, just being like, as soon as you say the word token, you lose me. Like, why is that important? And I always like to use the same example, which is like any company that eventually, goes IPO, right, goes public, and is worth like so much money. They all started from, their first 100 customers. And as a customer, you decide to use a product, sometimes for whatever reason, but your dollars are what makes up the company's revenue and profit, right? And essentially is what makes them so successful. And so theoretically, is there a way in which you can reward users who spent so much time and money and attention on your platform when you go public? Like, there's not a way to do that currently, but with tokens you can. And so I think that's actually like super powerful. Like, my sister, she loves her Robinhood, and like, I'm always like, hey, like you spend so much time on your Robinhood, you have so much money on it. When it went when Robinhood like went public, it's like kind of off of like your usage, right? Like a tiny bit. Like, wouldn't it make sense for you to like get a little bit of stock? And she was like, oh my God, yeah. Like, why don't I? And I was like, well, that's why tokens matter. So I always like to use that example. And so you can imagine like how much you can do with tokens too. And so, whether it's like fundraising, bootstrapping, but also just like having your users really like, corral around you. I think that's really pretty magical. And I kind of wish like that was always the way things were working.
I think the other incredible piece about tokens, Web3, sort of this next chapter, and what we've already seen is if there are shifts or a change in strategy where it's not beneficial to the user, or it's extractive or off market, everything's open source, right? You can fork these protocols. You can build, you can sort of build your own. And so, that's something that you can't do with the Web2 incumbents. Everything is closed garden. And so if these networks and applications are not building for the best interests of the current user and the future user, there's the risk of, you can just fork it and build a different version. And so I think that's another really powerful mechanism that is just not inherent in Web2 and what we've seen historically.
Yeah, it's very much, power to the hands of the users type. And I think all the companies building in the crypto industry understand that at any given time, someone could just copy paste their open source code and just launch a competitor. And so you hear the word, and I know you were saying this to me this week, you're like, oh, if I hear like community one more time, I'm going to go crazy. And it's true. Like your users and, the people who are behind the screens or whatever, like those are your users are your lifeline, So that's why whether it's NFTs or it's DeFi or it's anything else, it's so important to really just put power into the hands of the users, make them feel like they are part of it. And that's why also so many crypto companies have such a baked in like detailed plan of, eventually today we're only like 5 people, but we want our users to have a say in the future of the company and decisions we make. And I think that's a net good. That's a net positive. But I don't want to just like use this time to sing praises. Let's talk about the things that frustrate us in crypto.
Where do we start? Look, I think it was sort of mentioned earlier, but when you have these changes of behavior, sort of new technologies, new ways of building enterprise value, you're going to have bad behavior. You're also going to have tourists that come in. And so I think we love to see experimentation. What is frustrating though is just, sort of the tourist folks on the investor side who are investing because it's the hot thing and just completely retreat. Sort of it's they fill up the inbox. It's like, hey, what should we we invest in. It's like, guys, figure out your own thesis and take a long-term commitment if you're serious about this.
Pew,
Don't
pew.
just, yeah. And so, the hope is that folks that have increased their interest in the space are here for the long term. We are obviously so bought into this industry, continuing to grow and et cetera. But I think that just the tourist nature and copycatting things, right? Like, we want to see the net new. We want to see unique visions. And, the hope is this is not the case. They're not actually tourists. They're here for the long term. But, I think that's certainly worth noting.
I think you use the word tourist to kind of mean like cash grabby behavior, but I feel like that's like a little bit more human nature than it is like crypto specific problems. But I hear you. I think maybe one of my frustrations with crypto, and I will say it has gotten a lot better, but I think there's so many things that can be done to make crypto like easier and friendlier. And I think we've come a long way. But there are still so many things that are so many products and so many companies in crypto that are predicated on the fact that their users are super comfortable with crypto, and onboarding to crypto and even knowing how to like interact with smart contracts. And I think that's probably a limited market. Like you'll have limited users off that premise. So I get really excited when I see, really smart, innovative ways of making crypto easier, more digestible, and it could be like user experience. It could just be like, I know what I'm clicking, and the information is really easy to understand.
It has gotten better. Today you have real products, like, you have these non-custodial wallets, and now you can do things with your ETH. Before, years ago, it was just, do you hold on to your ETH or do you invest into an ICO? And there wasn't any product built around that. But, today you have DeFi, the emerging Web3 social stuff, NFT marketplaces, DAOs, and it will continue to expand. But yeah, I totally agree. I think.
Yeah. I mean, it's also a matter of time, right? Like at this point, the first time I got an Apple laptop, did not read the instructions, just open it and whatever. That was it, right? And I think, we'll probably get there one day, but not today.
I think that's right. And just, you look at the talent coming into the space today, and it's just, now it's so multifaceted. You have repeat founders, you have, folks from all over the world. Years ago, it was almost self-selective. You're highly technical, Solidity. Today, you can be a product manager at a tech company and play around with crypto nights and weekends, and you can be a very effective founder or operator in the space. And so, I do think it's already improved drastically, and it's going to continue to be that way as crypto Web3 just sucks talent out of these incumbent boring industries.
Yeah, no, I'm fully behind that. Like, total call for any talent, anyone who wants to like make using crypto as easy as using your iPhone, but not make it as closed as Apple. I think that would be great.
This is the talent board shout out.
Maybe one just to end the episode on, which is, crypto is so known for its volatility. What are some of the things either you tell yourself or remind yourself or whatever it is that like just gets you through, when the markets are down, 20% one day, and keeps going down? Like, you've seen this in the past 7 years. How would you caution people who are newer to crypto?
I think you go crazy if you're constantly checking prices, both crypto, any asset, like you will just go insane. And so like, I think you have to be very purposeful on not checking prices on a day-to-day basis.
It's a lesson you should take your own advice.
I'm like, okay, I need to stop checking prices.
Yeah.
But look, like, I think what's more important is you just don't want to let markets impact your day-to-day and your ability to execute and your ability to be happy. And so I just think it's so important to take a long-term perspective. zoom out, we fast forward 5-10 years, the crypto market today versus what it will be is peanuts. And so, I think you just have to take a long-term perspective. Sure, things will be volatile, but it's out of your control. And so, it's nice when things go up, but at the same time, I think just having a long-term view and not letting the swings of a day or a week impact your ability to be a happy person and someone who can execute at a high level.
So TLDR, go offline, take a walk, take a bath. Don't put everything into one basket.
Definitely
obviously.
take a bath. Yeah.
Yes. We actually talked about this last episode too. Maybe every episode I'll just do a plug for everyone to take a bath and listen to the
We're advocates. Yeah.
Okay. Well, thank you, Ash, so much for coming on the show. We'll definitely have you back. And yeah, we'll see you, soon.
Thank you, Katherine. Thank you for having me.
Thank you everyone for tuning into episode 2 of Cross-Chain Examination. If you haven't already, definitely go check out our first episode with Crypto Coven. Please like and subscribe wherever you're getting this podcast. So whether it's YouTube, Apple Podcasts, Spotify, or the like. Leave me thoughts, questions, suggestions, anything. Thank you again, and see you next week.